Hey everybody, it's Daniel here from Infovest. Hope you're all doing well. So let's talk about inflation, right? We had the US inflation numbers come out yesterday. We also had PPI number, the producer price index number come out today. But let's talk about consumer price index, the CPI number, a number that is looked at from the market participants, from politicians to ordinary people, traders, and yes, the Fed as well. So, first things first, the CPI number, the headline number, came in line with expectations, right? So, the number here, if we look at the year over year number, came at 2.5% versus the expected of 2.5. So, in line. However, when we look at and let me add to that, the month over month number also as well in line. When we look at the core number, right, the year over year staying at 3.2%, but the core month over month number came in higher, 0.3%. So basically telling you that the core inflation that takes out certain volatile numbers, like for example energy, that number came out higher than expected. So we saw a tick up in the inflation report, in the core number especially. Now, generally you tend to see the headline number maybe higher whenever oil prices and energy prices tend to go up, but we didn't see that. We saw the core number go up, and why is that? The biggest contributor to the higher inflation numbers, according to the BLS, is shelter. So reading here on the BLS website, it says the index for shelter rose 0.5% in August and was the main factor in all items increase. The food index increased also 0.1% in August after rising 0.2% in July. The index for food away from home also rose 0.3% over the month, while the index for food at home was unchanged. The energy index, however, fell 0.8% over the month after being unchanged the preceding month. And the index for all items, food and energy, rose 0.3% after rising 0.2% the preceding month. Indexes which increase in August include shelter. So here are basically the main components of the core number. Reason why we saw that number increase was because of one, shelter, airline fares, but shelter is the biggest component. But let's go through the list. Shelter, airline fares, motor vehicle insurance, education, and apparel. And indexes for used cars and trucks, household furnishing and operations, medical care, communication, recreation were among that decreased. Right? So when you look at it, airline fares, okay, August, people were probably traveling a bit there, so we saw a tick up in there. Motor vehicle insurance lately has been moving up higher with the cost of living. Everyone's comparing and complaining about it, especially in certain states like Texas, Florida, and so on. But shelter, here we go. Shelter is higher than expected, and it's sticking around. Also, like I explained in the previous paragraph, food is also higher. So you got your two main essentials that are showing the stickiness, showing that inflation is high in those areas and it's still having a tough time coming down. When you look at other components like the used cars, you're looking at household furnishing, people are not really spending in those areas. People may be even selling their cars to get rid of, to make certain payments for the shelter component, obviously, because the essentials have become more expensive. So that's why we're seeing a decrease there, especially many of these numbers in negative territory. So you're seeing more of a deflation in some of those components. But again, the problem is the inflation numbers are still going to be higher up if you've got essentials like food being in positive and shelter being 0.5% in August versus 0.4% in July, right? So it's what does this tell you at the end of the day, right? Now inflation's having a tough time to come down. Eventually we could see that come down depending on what? depending on how demand plays out. So shelter basically tells you that, demand is still there, even though there's countless of stories out there why, things are deteriorating in the markets, job markets, and so on. More and more people are looking towards losing their full-time jobs and moving more in the part-time section, looking for part-time jobs or working part-time jobs because they lost their full-time jobs. You hear big accounting firms laying off workers, big institutions, tech, and so on, right? So what's going on? Why is this demand sticking around? Well, no one will really know the true answer. You can point it towards many things, season things, summer. The data has time to show and reflect the true story behind it, and there's a lag component of it. But ultimately, at the end of the day, what does this mean in terms of the decision making when it comes to interest rates? Is that the Fed is simply not going to do the 50 basis point rate cut that everyone and their dog was expecting for next week. Very likely we're going to get the 25 basis point rate cut. And how the markets reacted to that, we saw the stock market, the bond market both sell off on that. But then later on, the stock market made highs on the day and reversed the whole move, completely shrugging it off, ignoring. At the end of the day, you're still going to get the rate cuts in September. You're still going to get rate cuts next week. That's what the markets are predicting and pricing in. That's a high probability. But the chances of aggressive rate cuts are not going to come in if inflation's still sticking around and nothing is breaking in the economy. Like I said many times on this channel, in order to get inflation down and that shelter component that's been sticking around for quite some time, okay? When you look at the data since February 2024 till now, August 2024, we've been in a range. Shelter has been in a range from 0.4 to 0.5, just 0.4, 0.5, 0.4, 0.5, 0.4, 0.5, 0.4, 0.4, 0.4, 0.5. There was only one time in June where it went to 0.2. So it's still positive. It's still higher up. It's still expensive, right? And people are hoping that those rates are going to come down and eventually that will seep into the lower cost of living, etc., right? But at the end of the day, if there is going to be a hard landing, we're going to see this number deteriorate. We're going to see the inflation number completely deteriorate as well. And if you're not on the belief of a hard landing or recession, then guess what? The CPI number is probably most likely going to stay where it is, stay sticky, maybe have, certain scenarios where it picks up, and those rate cuts are not going to be as aggressive and as helpful as people may think. There has been in history and time a period of time where, rates do stay stagnant for a very, very, very long time. Could be 5 years, 10 years, because economy is still doing fine, inflation is sticking around, so you need to bring the inflation down by keeping those rates higher up. Even if they cut, it's still not going to move the needle too much. But in order to get that real drop in inflation and those prices, that's where, when you look in history, a recession always brings that deflation, bringing those prices down, because people are losing jobs, people are not spending anymore, people may be selling their homes, people probably, demand has fallen, whatever the case may be, they're not buying as much, companies are losing profits, laying off workers, reducing the prices of their goods and services to attract demand again. So overall, this report, yes, we saw higher inflation numbers in the CPI report, but we have yet to see the true story of all of this. What it just tells us for now is that those promises and that hopium that we see in the markets of aggressive rate cuts, they're not going to come anytime soon unless this number drastically drops, or you get that job market getting worse off. Simple as that. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified in the next video, and I'll see you guys around. Cheers, bye.